Hey, good morning, everybody. So this is going to be the watch list for Monday, August 12th. And as you know, I always like to start out with the economic news to see what's going to be coming up this week, which it is going to be jam-packed. So looks like Monday is pretty much free to trade. No real news that's going to drop that we need to be concerned about other than the federal budget, which we all know is through the roof. So there's not going to be anything surprising there. Big numbers to watch are going to be Tuesday, Wednesday, Thursday. Tuesday is going to be the producer price index in your core PPI, in your PPI year over year. So what is the producer price index? It's the cost of goods that manufacturers have to pay to make goods and services. And if the cost of goods and services and raw materials are going up, guess who pays for them? They get passed on to the consumer, which we're going to find out on Wednesday what's going on with the consumer price index. So what's going on with the cost of food, gas, housing, everything that the FOMC is wanting to come down. Is it in fact dropping? Okay. Year over year is what's going to be the metric that they're going to be looking at most. Thursday, we have another slew of data. We're going to have the initial jobless claims. We're going to have the manufacturing surveys. We're going to have U.S. retail sales. So what's going on with retail sales? We know with luxury goods, it's definitely coming down. We're going to see import prices, what's happening there. And the great news is all of this is happening each and every day before the market even opens. So it's going to be very important that you at least give yourself 30 minutes before the market open to kind of formulate directionally where we're going. And then Friday, what we're going to want to watch is consumer sentiment. How is the consumer feeling? Your housing starts and your building permits. So the housing market is still somewhat under stress, whereas new construction is very robust, but existing home sales are still stubbornly high. And then mortgage rates, which dropped this week, have now reaccelerated to the upside. So that's what's going on with your news. Don't get caught in a trade. Let news drop, then take your trade. Let's look at a couple of the indexes and then some individual names. So what I want to start with is we'll start with SPY. A couple things with SPY that you know that I like to do is I like to figure out, do we have any gaps that we want to be cognizant of that could possibly fill to the upside? And we do have a gap fill here on SPY. The other thing that I would notate is we clearly had a huge market drop on the Japanese carry trade with them raising rates and the rest of the world lowering rates. So what I would be watching here is this level of 524 as kind of also a line in the sand, as so that we kept rejecting and then we started using it as support and then we flushed through it and then we didn't hold it and now we're pushing higher. So be cognizant of that. The next level that I would also be aware of, again, multiple touch points is what we like to see, where we're pushing down, we're holding. We held here a week ago Friday before we flushed, and now we're closing right on that level. So if the economic data is strong, then what I would be looking for is us to play to the gap fill to the upside. So I'm going to take a look at this on the 1 hour. You'll note we have not been able to hold this 533 level. We clearly didn't hold it here back last Friday before everything went haywire on Monday morning with the carry trade. But what happened is they've slowly ground the market right back up, and we're right here again at this 533 level. So I would definitely wait for this 533 to hold, break above, retest down, head higher for potentially a possible reject at the bottom of the gap fill, right? Because we rejected here. But if we make our way into the gap, I think they'll move it higher to actually fill it. So that's SPY. The other thing I want to show you on SPY that I would be cognizant of that I think is always beneficial that I like to do is from this pivot high to this pivot low before the news to drop a fib level. We are holding the 50% retracement from this drop down back up. So this is the most recent fib. We're holding that, which would tend to be somewhat bullish. Okay. If we break below it, then it would be bearish to the downside. So do keep that in mind as to we're kind of right at a point of, do we move higher? Do we move lower? And I can tell you the market is going to be waiting on this very heavy week of economic news. The next one I want to look at is the QQQ. We're going to do the exact same thing with the Qs. I want to take a look at this on a daily. Do we have any gaps that we need to be aware of? And you'll note that, yes, there is in fact a gap right above us, although as small as it may be, it still does exist and it will act as a magnet. Okay, so we have a gap fill right here back to the upside. This was the drawdown from the prior week Friday going into Monday. Again, we have started to recover. A couple things that I would look at here on this one as well. Just from a pivot high to a pivot low, my most recent fib level, again, I'm above the 50 heading to the 618. You will note that this is the golden zone where we typically will reject lower, but if we hold this, then we will typically grind up to the 786. Now, the top of the 618 also lines up with the top of the gap fill. So let's take a look at this on a 1 hour time frame. We're holding 449.50. That was kind of a very strong area for the hourly time frame. 1 hour, 2 hour, 3 hour. We pushed through it decisively. Prior it was resistance, 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 all the way back here. Now we're using it as support. So if the economic news is fairly strong this week, Monday, this might be your opportunity to play strength into the gap fill because there's no real significant news. So we'll just want to watch how this thing reacts overnight. Probably give the market some time to open, right? It has not been wise to take a trade right off the market open as of recent with all the chop and indecisiveness and then increased volatility. We'll also want to watch and see what the VIX is doing Monday morning. Is it still elevated or are we coming down? Let me just take a look real quick while I got you with me. On Friday, you could see that the VIX was all the way up here at 30 and we're now at 20, although it is finding some overall support to possibly head higher, but it also has a gap fill to the downside. So it's possible that the VIX will keep dropping, and if it keeps dropping, that's going to most likely be bullish for equities. So I would be playing, calls to the upside on this. I would not be looking for puts if we're going to, maintain and hold this level. But let me get rid of this fib level. I just want to take a look at this on an overall 15-minute time frame. What are we kind of seeing here? Nothing. We had some consolidation. We're still right in this consolidation area, right? So look for strength and then most likely look for calls. I don't want to be fighting the trend in this market. The next one that I want to take a look at that has earnings coming up that's going to impact the consumer, interestingly enough, is going to be Home Depot this week. So we do have a lot of names reporting earnings. This one is kind of interesting because you will note that if there is weakness with the consumer for the homes, right, home improvements, then what I would be looking for is potentially some rejects back to the downside, right? Well, why would I be looking for rejects? So we had a high, a low, a lower high, a lower low, but then we started a reverse trend, a higher high, a higher low, a higher high, a higher low, and now what are we doing? We're going back down again. A high, a low, a lower high, a lower low, right now a lower high, and what I would be watching for possibly is going to be a break of trend, right? You can literally see that. So if Home Depot, which has earnings, looks like it's on Tuesday, August 13th, if they are weak or they are citing weakness with the consumer, I think this is a good one. Again, I would not play it before they announce. It's much safer to play it after. Then you could be looking for shorts going into 331.64 or shorts going into 323, right? So technical analysis. Use where was their prior support at major pivot points. We have a trend line, wait for the trend line to break, and we go short. The next one that I want to take a look at is Walmart. This one should, again, consumer staples. And this one, if This one is much more intriguing to me, and let me tell you why. So we're on a daily here, right? And you can see that we have a gap fill to the downside. So if Walmart doesn't have very positive news about what they are seeing with consumer spending, I definitely think this one is headed lower. And just look at the tear that it's been on to the upside, right? We can kind of do the exact same thing that we did before. We're on a daily, just for conversation's sake. Look how far extended we are over the actual trend line. So let me just grab a trend here. Going up. Whoop. It's going to be one of those days, right? So we're looking for 3 to 4 touch points, right? How do you draw a trend line? We're looking for where the market has been respecting this trend. And you can kind of see, yeah, we'll break above it, but we pretty much recover it pretty darn quick. And then look how far extended we are over the trend line. So if there's weakness with overall Walmart, I think you're playing for the gap fill to the downside. The gap fill to the downside is about $63 down to about $61, right? Which is where we consolidated before we broke higher. So that's another one. Put on your earnings calendar to check, which is going to be on Thursday, August 15th of this coming week. The next one I want to look at is going to be John Deere. Again, exact same thing as the others. Note, just let's look at the overall pattern on a daily. You can tell that we are kind of stuck, interestingly enough, within this range, right? We have this range that's just trading in as of recent. We are also starting to break a bit to the downside. Let's look at the overall pattern. We have a high, a low, same high, which rejected off the same place 1, 2, 3 times. So clearly getting above 446 is not looking too likely. And then we were using this 348, 350 area. Remember, areas of interest where we're bouncing, bouncing, bouncing. We are now starting to break a bit lower. Again, we have an earnings date coming up on Thursday, August 15th. And if they report bad earnings or that overall sales are slowing, which last time their earnings were positive, they did beat on EPS and they beat on revenue. But again, I think you have quite a bit of buyers sitting right here. And we know that because they keep holding the market up. But we break below this, then I would definitely take a short position from the 350, and I'd be looking for a longer term to head back down to around 300, somewhere in this area, back down here, where again, the market likes round numbers. So that's about a 10% correction to the downside. So that's what I'd be watching on John Deere. A couple other ones that have been interesting. Going to be Nike. So Nike is just chopping in this range. This is really great. I think this is somewhat bullish consolidation. So you will note that we have a gap fill above that eventually will get filled 80 to 90% of the time. Is it going to be, this year, next year, a couple years out? Don't know. I mean, their earnings were absolutely horrific. It's going to take a couple quarters for Wall Street to get over what their issue is. But here is your channel that you are trading within, and it's pretty much respecting this channel, right? We get all the way up here to 75.50. We sell off to 71.14. We're now pushing up to 75.50. And then what I would watch for is if we start to grind up to this, and then Walmart has bad earnings, Home Depot has bad earnings, some of the other retailers have bad earnings, guess what happens to Nike? It's heading back down to $71, right? Now, I'm not going along on this until you can break above this 75.50 with some volume and a retest to move higher. And then I would look for a reject at the bottom of the gap fill. This is a huge gap, guys. I mean, this is a gap that's going from $80 all the way up to $93. I mean, you're talking, almost a 15% gap to the upside. And right now we're just consolidating. The good news is we're not seeing it push any lower. But if you get, again, back here down to 71.32 and we're able to hold this, I think you could just kind of trade this back and forth. And for those of you that have taken my class, this is another great example of an iron condor, right? We're going to sell a call right here at maybe 76. And then we're going to buy one out of the money to reduce our cost up here at 80. Here we're going to sell a put at probably 71, and then we're going to buy a lower strike put to finance it down here at 67, right? I don't think that we're going to, really break much lower unless we have a ton of turmoil. Now, with the huge sell-off in Japan over the last 5 days, it didn't even impact Nike. So interesting, right? How that works. Okay. We have another chips, Nvidia. I want to look at because we're going to have earnings coming up. Let's see. Here we go. Nvidia is definitely off of its highs. You could see it reached a high all the way up here at 140. We're trading at right now about 104. So what we're going to want to do is we know that this is the sector leader, right? We know that Nvidia is just a huge powerhouse. They have earnings coming up, not for another week, so till the end of the month, August 28th. So the market might chop around on this one for a little bit of time, but it is very expensive on an overall earnings basis. Well, when was a good time to pick up some stock in this was when it hit down to 97 and held. You can see we rejected. We had a gap fill here to the downside. The market filled the gap, and then it literally bounced off of this level, and now we're heading a bit higher. So would I look for a reject to the downside? Not necessarily. I think this one you just have to watch and see what's going on a daily basis if you want to try to play options. What I don't like with this is you have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high. If you break 97, I think it would be fair enough for you to most likely look at taking some puts. Again, if the economic data is weak. Couple other chip names that SMCI that just got blasted off of earnings. I mean, look at this one. This one was trading at $1,200 a share back in March, and we're now trading at $500 a share, right? So is this one that I would go long in? Absolutely not. I would be looking for more downside pressure. So let's look at it on an overall daily basis. We have no reason to believe that this is going to recover higher. Premiums are fairly expensive, but what you can note is a couple of things. We've pretty much found a lot of support right down here at $235, which is half of where it's at today. Now, would I just be going short this thing? No, but if you see some weakness in it, I think it's definitely one that you can play to the downside. If I take a look at it on an hourly basis, you'll see, again, we've had a lot of run up to the top, and now they are just taking the elevator down. The escalator up, the elevator down on bad earnings. And they missed pretty big. So the street did not like that. And then you saw the same thing with Intel, right? I mean, probably even saw it on the news. Look at this one. I mean, this thing was just literally right up here at $37 in July, okay? Not even a month. And where are we trading now? It traded all the way down to $18 and change. This one, I would be playing for a short to the downside. I think Intel is toast. They suspended the dividend. They're laying off tens of thousands of people. The government was giving them billions of dollars for a new manufacturing facility in Arizona, if I'm not mistaken. And then the question will be is, does the government even follow through with giving them all that money? I mean, I'll be amazed if the board doesn't fire the CEO, who is relatively new, but the stock has just been obliterated, right? Let's take a look at this on a daily basis. How far back do we have to go? You can see we had some support back here, okay, on two different occasions. Let me get to the low of this candle. There we go. Support. This was all the way back in 2011. I mean, 2012. I can't even remember what I was doing back those days, right? But then let's zoom in and see what's happening on a 15-minute. And it's kind of holding that level to a T, right? We broke below it. We pushed up and then they're selling into it. My inclination is they're going to keep selling into this thing to drive it lower. So let's see if there's any interesting news. Too big to turn, too vital to fail. Yeah, it's cancels their conference, plans huge job cuts. Just what a train wreck, right? And so this is why we don't ever get into a position before earnings, because if you were in calls thinking that this thing was going to go back to the prior pivot high, your options contracts literally went to zero. One other one I want to look at real quick, Warren Buffett selling half of his stake in Apple. We're going to look at this on the daily. Another intriguing one where Apple is in so many of not only the ETFs, but mutual funds and has such a high level of concentration. But this is a great example why I'm so passionate about marking the gaps. So the gap was here, right, on the push down. And look what Apple has done over the past week. It has literally grinded higher, but on lower volume. So what I don't like, again, is that the volume on Friday was lower than it's been all summer long. Now, mind you, we know that volume is low in the summer. So what would I be looking for on this one? Potentially, do we go up to just grind higher and fill the gap at this 218, right? Which this was a daily gap. So this was overnight hours. So you can't look at that. But do we reach up here or do we start to fail it? But it's so important why you follow the gap. And on a couple of the other stocks, I said, well, we'll reject at the bottom of the gap. Well, look what we did here. We rejected at the bottom of the gap. We rejected at the bottom of the gap. When you approach the gap, you don't automatically start filling it. It will typically reject, backfill, reject, backfill. And then finally break above. We came below. And then once you start to push into it, you will then typically see it grind higher to the upside. So keep an eye on Apple. I think, again, this one, if it gets to 218, I think this is probably an opportunity back to the downside, especially depending upon what's going on with the economic news. So a little bit longer than what I normally do, covering different stocks and different opportunities, but it has been one crazy week with a huge sell-off and a recovery now coming back to very important levels. So watch your SPY, watch your QQQ, some of the individual names, and whatever you do, don't take a trade unless you're at a level. We don't trade in here. We trade up here, we trade down here. We don't trade in here unless we have a high degree of confidence of what's going on, meaning we can see that we are in, for example, bullish consolidation right here. Right? This is bullish consolidation. We waited for a break above. You wait for your retest. Now here, it was a long time for the retest, but then eventually it broke higher to the next level. Okay? Or within the zones, you could also be looking for fib levels. So I could be saying, I'm in between zones. I had a pivot high. I have a pivot low. I could take a fib from the pivot high to the pivot low and then look for, was there potentially a reject? Let's do that together. Pivot high to the pivot low. We did not get the reject at the 50. You guys know if we don't reject in the golden zone, then we will use the 618 as support. We consolidated here until we broke above and then went higher. So if a fib doesn't reject to the downside, it then acts like support where the market was good with price recovery. And therefore, then that's your cue that you're most likely going higher. So if you're going to trade between zones, you have to have a reason why to take the trade and the direction you're going. And then again, as you guys know, you can always say, do I have a trend? Is there a trend being established? There is. When am I going to get out? This level obviously would be an opportunity to get out. We hit it. Or do we break trend back to the downside? And if it's meaningful, then most likely you're heading back to where liquidity was. So hopefully that was helpful. I hope you all have an amazing week and let me know if I can ever help. We'll talk to y'all soon. Take care.